things about trading Forex is that you don't actually know exactly which trade is going to be a crazy winner or just another loss.
What's up, everybody? We are currently live.
Take away the weekly.
Trace back down to the order and then that price is going to be bullish.
Point sort of chasing the market. I was more than happy to stay flat.
Hello everyone. What the kangaroo tell?
Always recommend trading on the 5 minute.
Some of these exotic pairs in pretty steady uptrend, making these higher highs and higher.
Mostly trend following the stimulus in a certain way.
Afternoon, folks. Afternoon, traders. Hope you are well. Welcome to this show. Thanks to Nick and A1 Trading again for having me back on. Last 2 weeks I've been on a Thursday, but I think from now on I'll be at this time on Monday morning, I guess, for you across the pond. It's 6 o'clock for me here in the UAE, and hope everyone's well and trading safe. So today I thought I'll go through the pairs that I'm personally looking at, what's on my watch list for today and potentially the week ahead. Jayesh, how you doing, mate? Hope you're well. And then I'm going to go into a little bit of take profit stuff, that you may find value of. For me personally, I think after the actual trade is placed is when most of that emotional aspect comes involved. So having a plan for once you place that buy or sell button is also very important. So I want to go into a little kind of presentation, but I want it to be interactive so you guys can call out as well on maybe tips that can help you take that emotional side out and make yourself robotic and placing better TPs, basically. Sorry, I don't know how to pronounce that. Don Keek. Sorry, how you doing? Morning. Serena, hi. Parsa, how you doing, pal? Good to see you back. Okay, so let's go into the watch list today, or we'll go into the index first. That's what I normally like to do to get that risk sentiment, whether stocks are pushing. Obviously, stocks pushing, you expect to buy those commodity currencies, those risk off currencies expecting to be weaker, etc. Don, okay, yeah, Don's easier for me. Rohan, how you doing, pal? Hope you're well. So the index is obviously an all-time highs, right? And I've been talking about it the last week that I have to be honest, I've probably said this quite a bit, but I don't particularly like it. Now it's starting to get, and I don't know if you guys have noticed this, or you guys and girls, but the last probably week or two, maybe even 3 weeks on US Open, the stocks have taken a dip, right? 5:30 for me or 9:30 for you guys. On the dot, the stocks have kind of had that dip downwards. And in normal circumstances, fine. In this circumstance, I kind of like this. So we're breaking through all-time highs. We've had a slight retest here on probably smaller time frames. So you've got to go with risk on, right? You've got to go with that because, that's what the chart's telling us. It's broken through all-time highs. That dictates that it has to be risk on. The new Delta Corona thing. Oh, yeah, God. Ahmed, how you doing, mate? Possibly, yeah. But, I mean, for me as a technical analyst, Parsa, I'm just looking at the charts. Whatever's happening in the world, it will be reflected on it. That's what technical analysis is, right? Everything that is known in the charts is reflected in current price. However, I want this now, considering we've had quite a decent impulse to the upside. Potentially, I was looking at a loss of momentum here, possibly heading for a harder reset. We didn't get that, and we had a decent push on, I think it was Friday, US Open. But what I want to happen now is just to digest this move, digest this impulse. I mean, my favorite thing to look out for in the SPX is a large impulse, a loss of momentum, hard reset, right? That's my favorite kind of context. And if you watched the other streams that I've done in the previous weeks, I've kind of shown where that's happened in the SPX before. Remember, markets have a memory. That's the concept. But what I want to happen is I want a deeper corrective here, right? Just to digest this move, retesting these all-time highs properly on these higher time frame charts to potentially move to the upside. Now, my bias for the index is to the upside. I'm not, you're not a genius for predicting that. Nick, how you doing, mate? Hope you're well. But I just want it to digest a bit more. I want, healthy trends move like this, right? And at the moment, we're moving like this. So that for me is not a healthy trend. And for the month that we've had, or the month that, I think price actions had, I know some other people are different. Some other people making decent money. But you just want that fluidity, and I want the index to be nice for upward movement. Now, the daily looks a bit better than the 4-hour. The daily here, we've had this corrective here, very simple bullish engulfer on a little bit of volume pushing through all-time highs. So on the daily, it looks better. And on the daily, it could push on. Maybe we get a bar or two here and then move to the upside. So, we have to remember we've come from this. So it's not like we're just moving from nowhere. We've had that potential digestion period, and it could be ready for a move. The market's not going to be stagnant forever. Those inflation fears kind of coming off a little bit, but now from a technical aspect, a technical side, yes, you could say Corona possibly coming back in. Whether that happens or not, let's wait and see. Just from a technical aspect, I say this comes back, retests to move more forward in the SPX. Personally, that's what I think anyway. And we've had a slight, and this is why I like things being, when I ever take a trade, I want to make sure that the trade I'm taking is ready to move, not bin move, not at the end of the move, at the start of the move. And we've had a slight fake here, very slight, but a fake indeed, probably on the smaller time frames on the SPX. And that's indicative of trying to play a market long that's just not ready to go long. So if it comes back down here, yeah, I don't mind that on the SPX. It won't be bad, but it's looking better than it has for the past month, that's for sure. The dollar as well. So the dollar, we have to say, has changed trend, right? So pre-COVID, whenever the stocks pushed, the US dollar would push, right? So stocks rise, US dollar strength. That was pre-COVID. Post-COVID, the US dollar has been acting more like a safe haven asset, right? Probably for me, my opinion is that flight to cash, right? When stocks fall, people sell their stocks. What they have to do is sell their stocks, they buy US dollars, right? US dollar strengthens. What may be happening now, and I know we're saying Delta and all this kind of stuff, but for my personal opinion, we're kind of getting to the beginning of the end of this horrible coronavirus. And maybe we start going back to that pre-COVID US dollar. When stocks push, dollar gets a little bit stronger. And you have to say this trend has changed, right? We're breaking anchors left, right, and center here from this big impulse. So, on a daily chart, again, I always use this 20 period as a visual guide to make sure things aren't extended, things aren't too far gone. You're not getting FOMO and buying at the highs up here. So from a daily perspective, this dollar has to digest this move. It has to digest this move. We want a healthy trend here. And I think we come back to this area for continuation to the upside. It just might take a few days. Maybe we get a complex corrective in this dollar here, back my favorite kind of ABC pattern. That's maybe what I expect. I'm not calling dollar weakness by any means. I'm just calling a dollar corrective. So you may get some choppy price action if you've got trades in on the dollar right now, until what I think will be until that 20 catch up, until we get that actual retest to move to the upside. However, in saying that, well, this has kind of failed. I was looking at the dollar longs, this dollar index long on this smaller time frame chart on account of this V reversal corrective push through. The push through was okay. It was on a bit of volume. However, again, indicative of this choppy market, indicative of maybe a Monday. Yeah, the ABC King. Yeah, I love the ABC. Honestly, I would trade ABCs all day. I love them, but also they work. I see it work time and time again. I like them. My favorite type of complex corrective. Oh, by far, they just work, and you see them happening time and time again. However, push through seems to have failed. So, that's fine. I don't think the dollar pushes. I think the dollar comes down, in my personal opinion. So, I'm just waiting for that move we had last week to digest to take those dollar pairs potentially longer. And I was looking at, so my watch list today, so I had CAD Swiss on it, which I think the CAD has kind of come off a little bit. So I had this CAD Swiss on the 30-minute chart, 1 hour chart, on account of my favorite cut with handle breakthrough, and the breakthrough became a little bit messy. So, you know, this is trades that I don't take, right? So not only, you know, being patient, but, you know, even though I haven't got a trade today, that's not a bad thing, because if I'd taken this, right, you probably would have been stopped out. So it's actually avoiding, by being a bit smarter than, you know, most retail traders, you're avoiding losses. You know, the name of the game is probably capital protection rather than making money. Because if you, first and foremost, if you protect your capital, the likelihood is you will make money. You know, you think about it in football, or soccer, as you call it over the pond. If you don't concede a goal, you're not going to lose the game. So that is kind of important with trading. However, with this CAD Swiss, again, Parsa, I'm going to say it again, we're getting this larger cup, and what looks to be potential here, ABC, possibly coming around that 200. Again, you'd expect retail traders, if I zoom in here, you'd expect retail traders to have stops down here. Now, I'm not going to say this is going to happen, but potentially we come back up here and give us something to go long on that CAD Swiss. I mean, I like the idea of it. I think Swiss comes off. You got stopped out on CAD Swiss. Yeah, I think I got stopped out on CAD. No, I got stopped out on Euro Swiss last week, not CAD Swiss. It's just been horrible. It's just been hard, Rohan, in my personal trading strategy to take anything out the market recently. But with CAD Swiss, I like this. You know, I want this to come down, come up, have another tag of that level, reload, give us our cut with handle. The handle, within the handle, there's that head and shoulders pattern. Again, very simple stuff for a breakout on CAD Swiss long. You know, it favors the fundamental side. The daily looks quite good. Larger ABC here. Big impulse. Outside bullish engulfer. Above that 20. Digesting that little move. That looks good, you know, from this rise here. And, you know, CAD Swiss I do like it. I'm just staying away from this mess here on the smaller time frames, to be honest with you. Staying away from that mess. Euro Swiss was another one that I didn't get involved in. But again, this is just for your kind of information. This is a setup that I did like. Again, V reversal, another reload, 20 period coming through, broken through that resistance area here. But the retest, now the retests I personally like are steady state. So a steady state retest back to the area, or again, that favorite ABC to go forward. So we didn't get that here. And again, this may be a good trade that I didn't take, right? It might be a good trade, even though it looked to be, we had the retest there, right? You pushed on. If you bought that candle and that stop there, you may get 1-to-1 out of it. I would have my stop underneath the previous swing, but it may have been a losing trade that I'm not involved in. So that's important about waiting for things to set up correctly and not getting that FOMO and that fear, let's say on this candle here, when this starts to rise, thinking, okay, maybe that's the retest, making sure you stick to that strategy and do the same things day in, day out. So Euro Swiss was one that I didn't take, but one that I do like is the Euro USD. Right, this Euro USD on the hourly chart, head and shoulders here, got your V reversal, tag that area. And I was talking this morning. Now which some of you are watching me know, I'm developing this kind of fake out strategy. And what I've found is the Euro loves it. The Euro loves a fake, specifically in these kind of climactic moves, right? Climactics are moves like this, exactly like this, that has broken through this area, right? And look what's happened. Move down. So I like seeing this now. The more and more I look at these Euros, and I'm looking at more and more trying to develop this kind of fake out strategy, right? And the more and more I see the Euro do things like this. So that's why I said this morning when I was doing my live stream that I don't think this sustains. I think this comes down. And that's kind of what we've got. So we've broken through. And with how this price action is coming through at the moment, I need that favorite parser complex corrective to potentially go short on that. The 4 hour looks good. You know, we've moved from this area, digested that move, breaking out from that area looks good to me. I don't mind that short. I'm expecting USD strength, but if I don't get the setup, I can't take the trade. You know, maybe it doesn't come. Maybe it's not ready purely because, you know, on this daily, have we digested this move on the daily, you know, from a daily perspective? You know, I don't think so. From a personal standpoint, I just don't think it is. So maybe we don't get it. And maybe this is why you see a lot of these things happen, these kind of fakes, because, yeah, a lot of fake, a lot of turbulence probably is the best way to say it, a lot of turbulence around these charts, just because it just doesn't look to me on these higher time frames that it's ready to move. And waiting for that. I know it's kind of boring sometimes, but, you know, and this last month has been boring, but waiting for that kind of digestion to come will help your trading, I think, a lot. And in terms of digestion, I'll show you this because this is what I think is quite good. So I was looking at USD ZAR this morning as a trade to the upside, which kind of went. Right, this was a nice setup. I wanted this trade, V reversal, and look at this squeeze into the area. Right, that for me is an A-class context. But not only that, if we dive into it deeper, we look at this just prior to the break. Look at that. That for me is just lovely. You know, we've got lowering volume on that kind of accumulation phase, and then higher volume during the break. Now, I don't take breakouts on the 30-minute or 1 hour. So I needed a retest here, but it just shows you the power of just little things like that. And I actually put a YouTube video out, if you want to check out my channel, about this, about just waiting for little things, accumulation, reloads, you know, channels, little complex correctives prior to that level will make such a difference if you are a breakout trader. And that just shows you the power of that particular setup. Unfortunately, I wasn't involved in it, but, you know, it's just good for your knowledge. But the main thing I wanted to talk about with this is, if we look at this rise from USD ZAR, right? This rise from here to here, and we look at this digestion period. For me, that's bad kind of drawings here. Just put that there. For me, that looks digested, right? It looks kind of healthy from this move. And if we compare this, I also had a USD Swiss on my watch list this morning. If we compare this to this, right? So a very decent move, but if we compare that corrective to USD ZAR, it looks slightly different, right? This is obviously a bigger move to the upside, and the digestion period is a little bit smaller. So just by looking at that, you know, I mean, I'm not saying this is kind of gone, but notice how we've gone and we've kind of faked out. Because that context, and, you know, it is important to get those higher time frame contexts, I think, in your trading, that just tells me that I like the USD ZAR better than this. And we can see the movement of them both, that this is kind of falling off, whereas USD ZAR, which is one of my favorite pairs to trade, by the way, USD ZAR, is not falling off as, okay, it's falling off a little bit, but it's not falling off as hard as USD Swiss, and hasn't had that, you know, as nice of a move to the upside, you know, as USD ZAR has a better move to the upside than USD Swiss. And actually, if you took that as a breakout, right, that would be a winning trade. You've got 2 or 3 R there. So it just shows you that power of, you know, waiting for the right context, making sure you have that higher time frame analysis that helps within your trade, that, you know, just gives you that little bit more confidence that, you know, the pair is ready to move. And that's where you get your biggest wins. You know, the biggest wins are the ones you get in at the start of the move rather than, you know, getting in at the end. And even with the daily, you know, the daily looks quite good there. So that's why I like that trade. And that's why I know immediately when I want to get involved or I don't want to get involved, right? I kind of knew when I looked at this USD Swiss that, you know, I don't really want to get involved in that right now. I'd rather, if you're picking, you know, and I'm selective in my trades, so I don't take a lot of trades per week, maybe 2 or 3 if I'm lucky. I knew if I'm taking my best one, it's not going to be this, it's going to be the other one. So that's USD Swiss. One I do like, and the final one on my watch list that I just found when I was doing my scan, is this German 30, which is the German equivalent of the Dow Jones. So we've had this larger V reversal and getting this head and shoulders pattern here prior to this area of resistance. So the pattern's there, the context is there for me. What I need now is Swiss yen. Yeah, I'll do that after this. What I need now is a push here in this index, another reload, let that 20 catch up, let that 20 start curling up again, a visual guide for price, and to potentially take that trade to the upside. I think this index looks pretty good. Again, no real extensions there, getting into possible wedging structure. Again, the theory dictates that that should move to the upside, but I need a little bit more for me to take that long. Good 4-hour candle here. So that could be a potential breakout that I take tomorrow. Again, I just need that accumulation, that little bit of a squeeze into that level, knocking on the door again. We've knocked on the door 1, 2, 3 times, and I want to bang through it. So that German 30 looks nice. And look here, this is a nice trade as well. So this is a V reversal, ABC, my favorite ABC, morning star here, couple of bars of accumulation, bang. That's what you want, right? This doesn't look extended, does it? It looks starting just at the start of the move, and you're off and running. So it's a very powerful kind of context. And yeah, that was a nice trade. I was involved in that one. That was really nice. And again, if we drill in just to these 3 bars, look how nice that is. As a trader, that for me is gold. High volume on this rejection bar, bang, off you go. Great context there, and just shows how powerful it is. Okay, Swiss yen. I'll do Swiss yen, and then I'll go into take profit stuff. Swiss yen. Which direction are you looking, Rohan? Rohan Ritchie. That's a great name, Rohan Ritchie. Swiss yen. Well, your original bias is the downside, right? It has to be from a technical perspective. Big move to the downside. Pull back to potentially that 50% fib level. We have had this 4-hour candle here. And, do I like the idea of selling the Swiss yen? Not particularly, but you've kind of got to go with it. Do I think the yen's going to come off? I mean, Rohan, so if I get what I want in the SPX, you'd expect the Swiss yen to fall. You'd expect the yen to get a little bit of strength as indexes fall. Whether that happens or not, obviously, I don't know what's going to happen in the future. That's just my personal opinion. But it's certainly changed trend, right? You've had a massive fall off here. So in terms of bias, yeah, my bias is to the downside. I just worry about this individual candle here. Although it's not coming on volume. That was obviously market open over Asia. Asia doesn't normally have as much volume, but yeah, my bias has to be to the downside. So I kind of agree with that. Personally, yeah, a lot of wiki rejection candles there. Why not? Why not, Richie? Let's take that down to the downside. Okay, anything else? Anybody? Everybody likes gold, right? I'll take a little quick look at gold. But for me, again, same thing. Same thing as the dollar index. So gold and dollar obviously have an inverse relationship, and it's just doing the same thing at the moment. Let that move. We've had the move. The move's gone. You've got to accept that the move is gone. Gold has had its sell, and you've got to wait for another leg down, whether it be another leg. That's my bias. That would be correct. Move down for continuation to the downside, but not anytime soon. Even though the 4-hour looks to be correcting through time rather than through price, right? So correcting through price is obviously a pullback. Correcting through time is, just moving on, ranging price action over here. And I expect we get more of that until this downside move has digested. So it's very similar to the dollar index. Pound dollar. The pound. Now, I did say last week, that's like, be wary of selling the pound. I did say I didn't buy into that sharp sell-off, but Okay, so I mean, what direction are you looking at, Don? Are you looking at long? Or are you looking short? For me, it's the same thing. If I'm expecting dollar strength, then this may turn into my favorite kind of ABC move to the downside. But I have to be honest with you. I have to be honest with you, and maybe my bias is getting in the way considering I like pound longs. Yeah, okay, your bias has to be to the downside. Pound dollar has to be to the downside. I just don't particularly trust it. I have to be honest, I just don't particularly trust it. You could look at the daily, right, and say, well, the moves happen. That sell-offs occurred. People know what the Bank of England came out and said, and we've got our outside bullish engulfing here. Maybe that move's happened. And maybe we start to move to the upside. So you're kind of getting conflicting messages there. You know, on the 4 hour, look short. On the daily, could potentially look like counter trend long. You know, on the smaller time frames, if you look at the 1 hour, yeah, I mean, you can probably say the same as the 4 hour, but I mean, with a slight fake out to the downside here, pushing on. And, you know, we're getting that 200, pressuring price to the downside. We've already had a rejection of that 200, as we have done here, But again, you could be getting a V reversal here. So today, to be honest with you, I'll sit on the fence with pound US dollar. Is my best kind of conclusion for the pound dollar, is I'll sit myself firmly on the fence. You're looking short bias. Yeah, I mean, you can say that. I think there's better pairs to trade than the pound US dollar, if I'm being completely honest with you. What is the best commodity stream channel? What do you mean, Victor? You're already shorted. Yeah, today was a lot of bullish movement. Yeah, I mean, it's just a bit of a mess, Don, to be honest with you. Just a bit of a mess. But again, look, this is the main thing. I can give you my views and my bias. If your strategy says you should short the pound US dollar, then short the pound US dollar. It doesn't matter what I say. It doesn't matter what anybody else says. If your strategy tells you short the pound US dollar, you short the pound US dollar. If your strategy tells you to sell the Swiss yen, sell the Swiss yen. I can give my thoughts, but I'm not in any of those trades. You know, from a personal standpoint, I give you my bias, but you know, I don't know what's going to happen in the future. Again, it's just my personal thoughts, but it doesn't matter. Like what I say, it doesn't matter. You know, I think I did say this the other week. If the best trader in the world comes to me when I'm taking a what trader would look a CAD Swiss long, and he's going short, then you know I go long. Best commodity live stream. I'm not sure, Victor. I guess you know on A1 they talk about commodities as well. I don't know, Victor, is the honest answer to that. Don't know. Just find a trade. Yeah, I don't know. Okay, so let's go into I don't know how advanced some of you guys and girls are in the chat, but I wanted to do a little bit of because, you know, it's a Monday, not many pairs on a Monday for me personally, a little bit of a workshop on taking profit. Because, you know, for me personally, I always say context is important. Everything's important, but certainly once you place the trade is where the emotions come, right? So looking at a watch list and looking at, oh, this could potentially set up, this could happen, blah, blah, blah. There's no emotional side of that, right? That's easy. Once you click buy or once you click sell, as some of you probably in trades right now, that's when it's like, oh God, I was about to say a bad word there. Oh God, what do I do now? And this is where this kind of stuff, your trade management plan. So I have obviously an entry checklist, my trade plan and all that kind of stuff, but I have a trade management plan. So what do I do after I click buy? What do I do after I click sell? Right. And for me personally, it's, you know, I know I'm not going to go into too much about stop loss. If you kind of like this stuff, I can do another stop loss one, but I'm talking specifically about, I know as soon as I click my buy or sell button, where my TP is and what I'm doing with my trade. And that takes away a lot of kind of thought, right? Okay, I'm in a trade. This is what's happened. Boom, I'm off. See you later. You know, the trade can do what it wants. And the main thing we're trying to get here with taking profit and tips to put your profit in is you want to make it mechanical. So hope, I think that Nick said this in his previous stream, hope and prayer is not a trading strategy, right? It's making it mechanical. You're doing the same thing day in, day out, day in, day out. You want to remove that psychological aspect. A trading strategy isn't difficult to implement, right? It's hard work. Yes, you have to do your back testing, all that kind of stuff. But ultimately, anybody can be taught a trading strategy, right? I don't believe that people can really be taught the psychology. The psychology in the when you beat the psychology is when you have that confidence in what you're doing by taking stuff. What am I trying to say? Taking the psychology out and make it mechanical. So being robotic, doing the same things, right? So this is what we're trying to do once we place a trade. Don't get greedy. This is my personal opinion. Go for the home run, but take a single, right? Your big trades won't come around often. You'll probably be living around maybe the 1 to 1.5 R personally from my strategy, and waiting for those couple of big winners that you get maybe once a quarter, maybe once every 6 months, that might give you 7, 8, 9 to 1, right? But you're looking just to, you don't want to try and pay your mortgage off in one trade. Just keep it going, because, more often than not, by taking some off the table, not getting too greedy, you'll be a better trader because of it. And always the law of large numbers. So don't remember the one trade that went on after your TP. So I don't know if you guys have experienced that. I certainly have, when I took profits too early, potentially after I had a few losing trades, and then the trade went, on and on and on in my favor. So for example, let's say I'd been down 2 trades and I had one trade that was maybe up 2R. I'd say, okay, I take my profit here and I get my money back. And then what happens? Boom, goes off, and I would have had 5 or 6R, whatever it is. So making sure that we don't do that. And again, vice versa. If you had a losing or a few winning trades, and you want to, again, just add more profit into it, and you just take it out, and then it continues to go. And what a good month could have been an absolutely excellent month. By taking all that away and doing the same thing is by, hopefully with some of these tips can help you. So the methods that I'll look at are support and resistance zones, the parabolic RSI, moving average crossover, risk reward, or anchor points. So support and resistance is very kind of simple, right? TP placed at the next zone of support and resistance, right? That makes it simple. The only kind of thing you have here is everybody probably defines support and resistance very slightly differently, right? So again, it's about having that knowledge of where to put your support and resistance. And let me know, by the way, in the chat, whoever's listening, what your kind of trade management tactics are. So what do you do? What do you do to get those emotional aspects involved? Or do you just simply buy and hope for the best? So support and resistance zones. So we have an example here. If we took a breakout for this trade, we've identified our new trade or a new area of resistance, and we've simply put our TP at that area. Simple, right? Whatever your stop loss is at your new TP. Pros, the markets are attracted to these areas. So it's kind of like a magnet. Each currency market is kind of magnetized by the support and resistance zone. And once you get into an area of clear air, kind of like this example here, the likelihood is it does go up and, attracts that area and you hit them, because you've seen, supply and resistance zone tested multiple times. The con of this is, where is the zone? So this comes down to your level, or how good you are at finding those support and resistance zones. Yeah, TP just below. Yeah, okay, there you go. Just below the zone is probably your best kind of put there. Rohan, well done. Yeah, a few pips below is definitely the right choice. I should have put that on there. Correct. Next, parabolic SAR. So what that means is stop and reverse. Now, I'm not very indicator heavy. As you guys know, I'm very a price action trader. But I think this is probably my favorite in terms of your trade management. And I think it works really, really well, right? It's used to indicate, stop and reverse points, like momentum shifts. And it simply is a series of dots on the charts like this. And this is actually what I'm using for my fake out strategy. I do take TP at support and resistance. Now I'm trying to implement trailing stop loss strategy for potentially more profits. Yeah, so I'll go into that at the end because there's something also that I wanted to add to this. However, once you place a trade, let's say you place a sell order roughly around this candle, for example. What you're waiting for the SAR is, if you got dots above, you're waiting for that first dot below. So on this candle, you'll be out using the SAR. The good thing about that is there's no thought involved, right? As soon as you see a dot on the lower side, you're out of the trade. So again, making it mechanical. Now, the good thing about using the SAR, right, is you can catch on to really good moves, some moves that kind of go out within those healthy trends. So if you get a large move down, the SAR keeps you into this move and you can capture really good profits. Now, the cons of this, and remember, there's pros and cons of everything. The pros and cons of the SAR is, if you enter a trade, let's say you enter a trade up here, right, and the market moves down, and just when you enter it, it has a slight corrective. So you've got your dots coming down, and on this corrective, maybe you get 1 or 2 dots here. And after that, you move to the downside. So you're out at this point in time, and you've not kind of experienced that decent fall. However, remember, pros and cons of everything. So with the SAR, if you do get that massive move, you stay into it, which is one thing I do like. And if you do like it, again, the main thing you do here is you test. What works best for me? Do I like the SAR? Do I like support and resistance zone, etc., etc.? But I think as indicators go, this is one of my favorite SAR. I do like it. You can use it for the movement of stop loss as well, excuse me. So if you've got your dots here, right, you can start moving your stop loss down if you really want to. I don't particularly recommend that, but again, in the instances where you have a corrective, moving your stop above the dot can get you in before it gets you out, before the moves to the downside, if that makes sense. So parabolic SAR. Thirdly, a moving average crossover. So the use of a moving average, the period is dependent on your strategy to determine when we are exiting our trade. You got to test it to determine if the SMA works better or the EMA produces the best results. The cons, again, similar to the SAR. You can catch on to the big moves. The cons here is it's subjective, right? So how many times have you seen, let's say we've got a 20 period moving average, and you get a bar, let's say we're on a downtrend, and you get a bar that kind of looks like this. So what do you do in that scenario? Do you take it out, or do you say, okay, it's not closed? So what do you do in that scenario, and then make it come down? So this is where the moving averages, I think, are a little bit more subjective. And if I'm being honest with you, I think the SAR kind of trumps the moving average crossover, to be honest, because there's just a bit more thought involved, right? With okay, maybe you get a wick here and you say, okay, what am I supposed to do on the wick? Is it crossed? Is it not crossed? Obviously, you'd have a plan for that scenario. But I just think with the SAR, there's just no thought involved, and that's what we want to do. So moving average crossover can work. You know, if you have a higher, maybe a 50 or a 200, can work quite well to get you in on those kind of longer terms. But I think unless it really resonates with you, just test it out. Test it out for a moving average crossover. So again, I mean, here you've got a kind of a touch here, but a close. I think the close above the moving average would probably be your best bet to start. But again, it comes once you test it and find out what works best, whether you like a quicker moving average, a slower moving average, an EMA, an SMA, etc. Finally, risk reward. No, finally, risk reward. So take profit is placed at a constant risk reward level. That might be 1.5, 2, 2.5, 3, etc. Testing to determine which RR produced the best results. As always, the pros of this, there's easy. Again, we're taking away the thought. You know, if you for me personally, I always put my first take profit at 1-to-1 risk reward every single time. And that again takes psychology, takes any thought out of it after I place a trade, right? And it's easy to do. So if you've got a 30 pip stop, right? Let's say this is your entry, this is your stop, TP1 right here, right? Simple, off we go. The reason why I like that is, again, if we come down and hit my stop loss, it's just a break-even trade, so I don't lose anything. So risk reward, I do like. The cons of it is there's no analysis involved, right? So let's say you've got a breakout trade, and let's say you're breaking out from this resistance level, your stops here, breakouts here. And if you don't have another area of resistance until all the way up here, right, and the market does go, you'll be thinking, oh, why didn't I just leave it and take it to the next SR zone? Right, so there is pros and cons of every single thing. The reason, again, why I like TP1, it takes half my money off. It means if I lose it, then fine, it's a break-even trade, but I'm just taking money off the table, getting away from that psychology, making myself robotic and moving on. 1.2, sometimes 1 to 1.5. Yeah, there you go. So risk reward. And I do like it. I like risk reward. I know there's no analysis involved, but I found after testing, again, back testing all these things, and this is where the work for trading comes in, because you have to go back test. Okay, maybe 1.5 to 1 works better. Okay, but I'll test 2 to 1. Maybe I'll make more money then. I'll go and test moving average crossover. I'll go and test. This is where all the work comes in to find out what works best for your strategy. But you kind of have an idea of what resonates with you. So for me, moving average crossover doesn't resonate with me. I chuck it in the bin and say that's not for me. SAR does, risk reward does, finding out what works the best and ultimately what makes yourself more profitable. I use Darvis ghost boxes on the 4 hour to stay in the trend, all in, all out. Good. There you go. As long as it's just something that, again, doesn't involve your mind, then perfect. That's exactly what you want. And anchor points as well, finally, you can call them. There's a difference between an anchor and a swing, right? A swing is, a swing is that, right? That's what I consider a swing. An anchor can have two bars, let's say a downtrend anchor, either side. That for me is considered an anchor, right? So you got 1, 2, 1, 2. Again, for an uptrend or a downtrend anchor, you've got 2 bars here, either side, 1, 2, 1, 2. So you can do that. I think swing is probably the better place to start. But this is again what I do. So I place 50% or 2 orders at 50%, 1 TP at 1 to 1, and I trail the rest, not mechanically, manually. So I manually trail the rest, looking for those swings or potential anchor points. So if I'm in a trade and I've hit TP1, let's say it's in corrective mode, but it's not really looking like it's going to break these highs. I move my stop here to the initial swing. But if I see an anchor at this point in time where I think, okay, I think momentum is maybe shifting, then I'll move my stop to the anchor point. Right? So that's what I know about the momentum shift, about moving that. So it is a little bit more probably better used to people that are more experienced in the markets, because you can get moves. Again, this is where it comes down to digestive periods and making sure we've got healthy trends. Is you can get an anchor here, but if you had a massive impulse, I'm just going to wait, because you could get my favorite kind of complex corrective. You would be out, and the market moves on in the kind of right time frame. So having that experience of what's happened in the future, what's happened in the past, can help with this here. But I do think it's something that you get better with time, and it can yield very good rewards. So that's tips for taking profit. Again, this is an example, moving your stop as market progresses to capture as much profit as possible. So the cons, you can catch very large moves. The pros, catch very large move. Cons, volatility spikes, those favorite volatility spikes, and also patience. So you have to have patience in terms of that. If you've got a 4 hour chart trade and you're correcting, this corrective might take 2 or 3 days before you can actually move your stop to the upside. So anchor points. So like I said, I like that. But the main thing here is we're making it mechanical. Now, to add to all this, not only do we have to have that trade management, but also one thing that I think people or traders might not do is place more than one trade, right? So they might place one, let's say it's one lot, and they place one trade and that's it. I really don't recommend that from a personal standpoint. I think, having 2, even 3 trades on, we take partial profits at, along the way, I think that's a much better tactic. You can take profits at 1 hour, take another 30% at 2 hour, or whatever you want to do, support and resistance, and then trail the rest. I think over the long run, that's more profitable than simply saying, okay, let's say you like 2-to-1 risk reward and just placing one trade at 2-to-1 and that's it. I think adding a few more trades in, maybe 33% per order, taking one at a certain risk reward, taking one, maybe using an SAR on one of them, whatever works the best. But I certainly think adding in more than one trade certainly will make a difference. So that's my opinion. Whether that helped or not, let me know. I know some of you in the chat are probably a little bit advanced and maybe know it. OTCR, maybe you're a bit more advanced. But if you're new watching this, hopefully that helped. Again, the main thing in here we want to know, or the main thing here we're trying to do, is make it mechanical. What if goes against you? You mean, what if the trade goes against you? Yeah, that's more for stop loss. So I can do another one on stop loss because it's a subject by itself, your stop loss placement, because again, a very important part. But if the trade goes against you, for me, again, this will come back to back testing. I've figured out that with certain pairs, if I see a shift in momentum, I'm out. On other pairs, if I see a shift in momentum, I stay in, because my data and my statistics have told me that over the long run, remember the start I said it's the law of large numbers, over the long run, I'll be more profitable by doing that. But again, back testing. This is where the work comes in that not a lot of traders like to do, is go and back test things that work out. But I'm just trying to give you the tools to potentially help you moving forward. So using very simple techniques. There's other techniques out there. Again, I'm just going for kind of simple, easy to use. I always believe from a trading perspective that the simpler it is, the better I like it. I think that was a famous quote by someone, but I certainly believe that. And it's just finding out what works best for you and what produces the best results. So this is where the work comes in. Fortunately, not everyone can do it for you. You've got to do it for yourself, and you'll find the benefits if you do that. All right, everyone, that's all from me today. If there's anything else, put it in the chat. If not, thanks for coming. I appreciate it. Thanks to A1 and Nick again. And I'll be on next Monday, same time. Thanks, everyone. Appreciate you coming. Trade safe. Cheers.
Hey guys, thanks for watching today's show. I hope you enjoyed it. And before you go, make sure to check out our guest today and also subscribe to the A1 Trading YouTube channel if you have not already. Risk Calculator is a risk management tool built specifically for MetaTrader 4 and MetaTrader 5 to help you position size properly. Their easy to use software will allow you to enter and exit positions with lot sizes that are calculated for you, suited to your risk management settings that you allow for the tool. This is a big thing because a lot of us struggle with over leveraging or accidentally taking a position size too big, and Risk Calculator is there to help. Like I said, with the click of a few buttons, you're able to set your trade and the lot size will automatically be calculated for you so that it suits your risk management plan. In addition to actually setting your trades with the proper lot size, it also allows you to manage your trades as they're going along. Things like trailing stops, moving stops to break even, or even partial take profits are all tools or features available with the Risk Calculator functions that are available on MetaTrader 4 and MetaTrader 5. If you're interested in checking out Risk Calculator, there's a link down below in the description. And if you use that link, it does help to support what we do here on the channel, which is provide free trading content, again, by thanks to the help of our sponsors. So thanks so much for watching today. Again, make sure to subscribe to us here on YouTube if you haven't already, and we'll see you back in the next one.